Hi, Chris Duff over at Serious Land Capital Vacant Land Funding Partner. Today, just wanted to share some updates and learnings that we've had for a very large transactional same day close deal that we're working on, several $100,000 at stake here. So I know I've commented before, and it's just a trend within the industry, double closes being more common, allowing you to offer more money up front to the seller. Maybe it takes a bit longer for them to actually receive their cash, but if that's not as much of a concern for them, gives more opportunity to participate in a higher volume of deals, even if the overall absolute dollars to potentially work with from double closes might be diminished. But probably relative margin is more accurate there because absolute dollars could actually be quite a bit higher at lower relative margin deals, just going higher up the value chain for respective land deals there. So something that it has come across that really seems to be different for whatever title company that we work with for these transactional deals. Whether they're same day closes or one, possibly 2 business days in between, is handling that title transfer piece in the middle and trying to mitigate the risk as close to 0% as possible. So that everybody just kind of, takes it for granted that, okay, these deals should just be pretty simple. I find some capital for the transactional side, already lined up a buyer, just going to need the capital very short period of time, pay a couple points on that potentially, or some minimum fee, and can move on. And that in principle and on paper works extremely well, and we've participated in those deals in the past, but our structure has changed a bit more to really cover those edge cases, particularly associated if the B2C end buyer drops out of the deal, because then it's just kind of a catastrophe from a number of reasons. First, if you don't get the purchase agreements assigned to you as the transactional funder and you haven't set up documentation appropriately for an underlying lien on the actual property and a mortgage, or if you set up a lien on the operating entity of the client that you're working with, then you're potentially left holding the bag without any real recourse until a backup buyer is potentially found. And given how narrow some of these margins of transactional deals can be, there's no guarantee of that, especially when days on market can extend quite far out for certain land pieces. And usually we're not going to be diligencing the underlying asset quite as much as we would if we were doing a full equity purchase, because again, theoretically the risk is supposed to be more mitigated with buyer already lined up, so it's more of a buy side risk or a end buyer risk versus asset risk. So we have to assess from that perspective. And let's say that we do get the property assigned to us and the B2C buyer still dropped out, and then we're left holding the property title, but again, there's no guarantee we're going to find another buyer in a reasonable time frame. And even worse is that we're holding a property with almost assuredly not having equity side margins. Otherwise, it probably wouldn't have been a double close in the first place. That's just something else to keep in mind. That's kind of worst case scenario. In regard to that, we had to keep thinking, all right, how do we structure these, if we assume the risk is probably going to be below 1% most of the time, and generally we're going to be assessing that B2C buyer. If a lender is involved, we're going to be talking specifically with that loan agent, make sure all contingencies are in place. How exactly does the paperwork flow? When is the exact time of title transfer taking place? How long is in between that? Does the end buyer need to sign docs confirming that their wire will be signed off on their side to actually close the deal? That's something we learned more recently, is that even if wire is in escrow, like all the end buyer funds, if they don't sign off on the closing docs, the title company can't just decide to close the deal on their own. They need the buy-in from that end buyer. So we need full participation from that side. And generally, we're not able to sign docs simultaneously. So that's another avenue that we tried to explore is, okay, can we just be on the phone with the title company, wait for the B2C buyer to come in, and then we can, wire in our funds to escrow, but only sign when we're dead certain or as certain as possible that the end buyer is going to sign their docs. But because when we run the assignment type closing scenario, then because there's that title transfer involved, the deed has to be notarized and, potentially associated docs. So generally, we're going to have to be signing docs at least a day before, assuming RON, remote online notary, isn't available. So you're not able to close that whole quite as much, at least in the circumstance that we're operating in for this larger deal. Again, the title company we've worked with for one of these has been a bit different. So we finally arrived at a structure where, okay, we think it's acceptable risk to not be doing a simultaneous doc release, even if our wire is going to be in there. We're going to have to sign off anyway. We're taking some risk that we're going to end up with title here. But because we assess the B2C buyer so well, and they've actually looked to bump up closing to close even sooner, that's as good of a sign as possible. If the end buyer was trying to extend out, or still some trepidation about the lender and so forth, that would make me a lot more cagey about the deal. But because the end buyer is really the primary risk here, that drives a lot of the decision making for reducing the risk as close to zero as possible. But with all those extra protections in place, so how we adjusted it was we had a assignment for both sides, both the A to B and the B to C side. So our firm would actually be signing the docs. We take title for, those few minutes in between the same day close, and we'd throw a personal guarantee on top of our standard transactional funding docs defining our fee to the client who's working with us. So that gives them a certain period of time to remedy finding another B2C buyer if the current one drops out. And if they're not able to do that, we'd effectively have the legal wherewithal to go after their personal assets. So we were also assessing their individual financial positions here. If that sounds like a lot, yeah, it definitely is. And it's something that we've had to go back and forth with and adjust our structure, because the more we've dug into these transactional deals and the more experience we've been getting with them, the more complexities arise. And, trying to prevent those edge case scenarios is just so important, because if you're throwing out, hundreds of thousands or more dollars into a deal with very limited margin, like for the return that you're getting on that, the risk has to be effectively 0% to consider getting in these deals in the first place. So investing a lot more for covering those edge cases, which would still be painful if they ever happen, but it gives us a lot more comfort to understand that we've covered as many of the loopholes as possible and protected our position, and putting just a better alignment of risk to the client who's brought us the deal, since we're the capital partner within it. Effectively, it's transferring a lot of that skin in the game to who brought us the deal in the first place. So just to update you all on that structure here, I'll let you know when we complete successfully. It should be next week. But with that, if you're ever looking for funding and seriousland.capital, land daily diligence on Mondays and Thursdays, zero cost for any deals that you're trying to review, whether you want funding or not, and then landpricer.ai. We're about to get a new website out. I know the current one is broken as far as email signup. Sorry, there's just a lot trying to be processed at the moment, but that's for the simplest and most accurate way to assess land deals. And of course, the Dave Deniston Unconference in early August. Use my last name, DUFF, all lowercase, for $200 off your ticket. Take care now, everybody. Bye.